some adjustments that we need to make in this account this morning on the RTY. It looks like that, and I know I've talked to a few people this morning on the phone regarding some adjustments. We're going to win on this RTY. We just need to believe and just continue to make adjustments based on the deltas wise. It's funny that this RTY did not move for like an hour, and then now it's moving up again. Another 2 points is going to hit its high of the morning here in a second, which is about 1934. And I have already sold it this morning for a second, and you can see I got out of it basically on a scratch after fees and commissions, maybe $1 or so, something like that, maybe $2. But I have it in again to sell once it goes over the 135 mark, to sell it again this morning and see if we get a small pullback. But it looks like it's jumping up again right now. So to do an adjustment on this, we got 9 days to go. It's at the 1955, which is the 37 delta now. What I'm looking to do is buy it back and then move it to the 1970. See if I can do it that way. So this is the, if I can get it to go through, I'm gonna buy it back for about 660. And we're going to, I can't move this in concert the way I want to move it, so we're going to buy it back this way. We're going to put it in a little higher so we can get filled, and no cigar yet. All right, so let's move it a little higher here, 690. All right, perfect. We got filled at the previous order at the 680, I believe. All right, so we're going to sell this at the 1970, 1990, and I believe that was 2 contracts that we just did. So let's just make sure I'm not messing this up. All right, so yeah, that was 2 contracts. We're going to sell this at there, and then we're going to send that, and we have not got filled yet. I'm going to move it down a little bit, even though I shouldn't. Move it down to 5, and we're going to sell that, and we're going to get filled at 2. So now we're at the 30 delta. We moved from a 37 delta, as you can see here, to a 29.30 delta. So we just reduced our risk. Now we're going to go and see how much we need to get filled. So we're going to go over here, and we're going to put in the RTY just for today. And let's just move that back to refresh that. So we are down, if you can see here, about 197. Let's just say that's 17 plus 180, so we need about 197. I just got filled on the put side to get to move that up. So that's just, I already had that put side in. So let's just see what we need here. So based on what we just did right now, we need about 440, 457 plus 10 plus the 12. We need about 479 to get filled, to pay for this move that we just did. I'm looking at this, and this. Actually, that's yeah. We need 479 to get filled. All right, so let's go over there and let's get that back. And we're gonna get it back by being aggressive here. And let's look at the 1870, 1880. We're going to do 3 contracts, and that should give us, let's give us 467. We need more than that, so we're going to be a little bit more aggressive and let it come back to bite us. But there we go. So we got the 340. We're going to the 25 delta, the highest we will roll up, and we're going to see if we can get filled at that with 3 contracts. And let's do it. Come on, give it to me. Get a little fall back and get filled, please. All right, so, all right, give it to me at that level here, people. And then we can get the monies that we want. All right, so we just got filled. All right, so now if we go to history, you'll see, and we're just gonna let that put side come together here. So this is just for today. We just want to see what happened today, right? So based on today, we received $52.50 minus the 25 in commissions, minus the 17.40 in fees. We did this for a credit of $10.10, right? So we already received a credit when we did all the other type of adjustments on this. So you can see that here that we still have, we received so far in all this new positions $1,000 in credits, and we just did that adjustment. All right, so we're done with that for now. We'll see how this plays out. We're at the 25 delta on the on the put side with 9 days to go. We're at the 29 delta on the call side, and unfortunately, we had to go closer to at the money on the put side. I could have added another contract and got further away on the call side, but I didn't know the stat. I didn't look at it well. I was trying to I was on a few calls, like I said earlier, so I didn't look at this account that well. Could have kept this put side a little further away, but that is fine. When you go over less than 7 in the Dorian Way School, you'll know that you can roll up to finance something or do a standalone roll up as high as the 25. I try to avoid that, but we're still good here based on the expected move. We're outside of the expected move on the Tastyworks platform. It's this orange ruler type of number. If you're not on the Tastyworks platform, it's the number over here to the far right on the option chain. So this is basically 49, 50 point expected move right now. And the Russell seems like, in my opinion, it wants to go to 2000, but we're going to hope that it doesn't go to 2000 within this next 90 days, that it kind of settles down for a second and we can get out of this position with a win. All right, so the next thing I wanted to look at this morning is we have that future position on that micro future that we're trying to get filled at. If it shoots up to highs again today, we'll get filled on that. And what we're trying to do is just do a little scalp, get in and out of it. So this morning we made about $4 after fees and maybe about $2 or something on it. But what I did was I sold it, and then it went down a little bit, and then I put in a stop limit so that I would at least win something if it shot back up, and I'll get out of it. So that's what happened here, but I was hoping that it would fall out a bit. It'd go down 50 points or something. Once again, I wouldn't be surprised that if it does that, and that's going to probably, if it does that on this position here, then what we would do, we'll play the seesaw effect. If it drops big on the put side, we'll adjust the put side, move the call side back up, add another call to equal out the iron condor that we had on now. So, but we will by all, if we have to do whatever it takes, we will win on this position, because we're not going to let this Russell beat us going to this as much as it went up. With that said, I do have some trade ideas this morning that I wanted to provide. Since we're in the Russell, the first trade idea I had this morning is the Russell. I believe that maybe once the calendar year changes, things will change and things will calm down. People will come back to their senses. If it doesn't, I still think this is a high probability trade of selling the call side of this Russell. It's way overdone. It's ridiculous to this point. You can see that if we bring up this Russell here, this RSI, this regular strength index, you can see that that's overdone. You don't even need to have that or understand that. You can just look at this and know that this is way overdone. This is an index acting like recently like some type of stock. So I'm set on this. Is 37 days ago, selling the 2090. So this is the 15 delta now. I was looking at this morning, it was like a 13 delta, and buying the 2110. So 20-point widespread, looking at for 225, you can get this right now for 230, 240. And that's you get $120 before fees and commissions. I'm actually going to do this trade because I believe in this. You see, I've already shortened this, but I think this is ridiculously overdone. But if you're not comfortable, I know none of you are not comfortable with the call side, selling the call side, especially in this crazy bull market. I'm comfortable with it. Believe I will win on this, so I'm going to do it. and I'm going to sell that at the 240, and we'll see if we get filled. And then I'm going to hedge it. So I encourage everyone to hedge everything that you're doing now, especially to that put side, because when the market falls, it could fall so fast that you have no chance to put on a hedge at that point to offset some of the things. So unless you understand how to trade the futures, the E-minis or the micro futures, and if you haven't been in course 2, you're probably not really sure on how to execute that. We talk about it a little bit in course 1 on lesson 8, but we don't go over it in enough detail, I believe. All right, so the next trade I have this morning is gold, is the futures in gold, the GC. And I was looking at, with 19 days to go, trying to get, this is just plain the end of the year type of move again, selling a put spread in this, believing that gold could jump up if the market goes down, or it could go up regardless. So I'm selling the 1785. Gold is down a little bit today, was down quite a bit today. So selling at 1785, buying the 1775. And that's for 110. You'll get at least $100 after fees and commissions. Since this is what I was looking at this morning, it fell a little bit more since I looked at it. So you can actually put this at the 15 delta there and put it in at and let it sit at 110. So you're at the 15 delta, a 10-point wide spread. Your max loss is under 900, as you can see here. Your buying power effect could be a lot better than this. It all depends on your account. All right, so I like this trade with gold. All right, so it looks like we should have got filled on that Russell position, right? It hasn't filled yet. Okay, it's about to, because this Russell just jumped up. I'm talking about this scalp that we're trying to do, because the Russell just jumped up again. Wow, that's super strong. All right, so that's the gold. Another position I was looking at this morning is the euro, the 6E. This is a currency, and I was looking at the call side with this as well, with 37 days to go. All right, so that's that Russell position. That's that scalp that I said we were going to do. So we'll see how that plays out. And then now we have, if we sell on this 6E, selling the 1.245 and buying the 1.255 and doing it for at least 8. So I like this trade as well. I would put it in at 8, short 30-day trade, and you're hopefully being in and out of this with 15 days. Your buying power could be insignificant. You receive about $90 after fees and commissions. This is the buying power effect. It could be less than that in your account. All right, so the next trade I have is a Costco trade. Costco is going to have earnings after the bell tomorrow. So what I was looking at here is, and it was down earlier this morning, it's up now, just like pretty much everything else except the NASDAQ stocks here. We're down about $1 on this hedge now, which is about $5 on this hedge. On the scalp that we're doing on the Russell. It just keeps going up. It's up 1%, no fallback yet. Wow, that's amazing. All right, so the next iron conduit I'm looking at in here is, let's just sell the call side first. I was looking at the 400, 405. Based on this expected move, it's about 9. Let's say it's 10, right? So it's trading at 378. Let's say 379. So about 390. Based on the expected move on the call side. On the put side, I was looking at selling around the 365 and buying the 360. So, and then if this goes, I was thinking I thought it would be a little bit more than that. Unfortunately, that's not. It was looking like I was trying to get $1 out of this, and it's not even close to $1 right now on this position. So I don't like it, because you would have to go up a lot higher to get what you want dollar-wise. I like that 400 strike there. And then if we went to that, I don't like that. So it's only about $64. it's still at least 12% on your buying power. So if you're interested, I don't like it as much. If it was around $1, I would definitely do this trade. Next trade I have is Oracle. This is after the bell tomorrow as well. This is an earnings play, and then what I was looking at is doing an iron butterfly. So selling this here, and the expected move, as you can see, is about just under 3 here. So I was thinking of buying the 2150 on the call side and then buying the 5650 on the put side. And you can see that I was looking at it for 181 this morning. It is at 174. That's still good. That's the credit that you can receive. The buying power effect is insignificant. And that's how much you can lose on this, right? So you can lose. All right, so we're up on that hedge really quickly. We're up on that scalp for a second. So what I'm going to do is put this scalp in as a close order. So we put it, we got filled at, let's put in a stop limit. So just in case it shoots back up, right? So let's put it in at, we got filled at 510. We're going to put it in at, 3510. We're going to put it at 3410, and then 3420 is the thing is going to trigger here. And we're already behind, we're already over that. I missed it. So you can see that it's already above that now. So I need it to fall below that again, and then we'll put that order in. Maybe we had our opportunity, I'm not sure, but it's about to go back over to 1935 there. So we'll let it sit for a second and see if we can get it to fall again, and then we'll go back. So let's go back to this Costco trade really quickly. All right, there we go. We got it to move down. So that's sitting at, I don't want, didn't. That was fast. It went to 133 really quickly, and then now it's going to go back over 135 here. It's got a, yeah, so I don't want to send this now. So there we go. I think it's, I believe we should see some type of fall sometime today, but we haven't got that fall yet, which is unfortunately, unfortunate. All right, so anyway, so they just got us out at a bad price, but we didn't lose on the trade. As you can see here, we collected. We're gonna just go over to this history. We didn't make any money, but we're gonna sell it a little higher in a second here. So anyway, let me just show you real quick. This is the trade for what we did so far today. So we've made about $4 on these scalps. It's nothing, nothing to write home to moms about, but it's better than losing, right? So if we can get it to shoot back up, we're going to scalp it again, and hopefully we can get a big drop on that Russell, and then it'll pay off, because I believe once again, I wouldn't be surprised that Russell dropped 30, 50 points in a very quick manner. All right, so going back to this Costco trade, going back to this Oracle trade, let me type that in really quickly here. Come on. All right, so this is the Oracle trade, and let's look at, this is an iron butterfly, looking at it for 173. I'm going to put this in and to trade this and try to get out of it with a 30% to 40% profit even before the earnings come out tomorrow after the bell. But I'm going to send this now. I like this trade. The risk reward on this is nice. So I'm going to send this iron butterfly, and we're going to see if we can get filled at somewhere around there. I'm not going to force it, and we'll go from there. So we could have got a little bit more out of that, and maybe, but I'm sure we'll get another chance because this Russell is ridiculous. All right, so that is that. Let's see one more thing here. We have a ES position here on that's expiring in 9 days as well. You can see that this ES is that's at the 15 delta on the call side. The put side is way down there at the 6 delta. What I'm going to do is move this up a little bit to collect a little premium I'm going to move up just one leg, and this is a 40-point wide spread. So to be able to do it in concert, I have to keep it 40 points. So that'd be 20. This would be 40 here, and then another 40 points to sell. And if you don't know what I'm talking about, look at the Dorian Way YouTube channel, and you'll see how to adjust options on futures with Tastyworks. For now, they should be changing that in early 2021, but you'll understand what I'm talking about if you look at that video on YouTube. And if you haven't subscribed to our channel yet, please do. All right, so this is 40 points. This is 60. We're gonna move this up there. We're gonna get another $55. Let's put it at 10. See if we can get it after fees and commissions. It's gonna be about $46. It's not a lot, but we're collecting a little bit more premium at that 11 delta. And it looks like we are off to the races again on all of this stuff. And I might decide to just buy back this put side and then move it up. So buy back the whole put side and then just move the whole spread up, and be able to collect a little bit more premium on this put side, because if the ES keeps going up, this put side is not going to help me anyway, right? So let me show you what I mean by that really quickly. Let's see if we can get filled by buying this back really quickly. This is a 40-point wide spread. If we're going to do 2 contracts buying it back, let's see, it's going to cost about $73 to buy back, and that's 70. Let's try 7. Let's replace that order. Come on. All right, it's saying pending, so it's not letting me change the order really quickly. I don't know why that's pending, why it's taking so long to get that order done. All right, so now it's working. All right, so let's hit replace, and let's see if we can get filled and remove the trade. All right, so no love there. All right, so we just got filled on that. And then what we're gonna do here is that we're gonna roll it up, and we're gonna go to the 15 delta here, and let's actually go here. And we had a 40-point wide spread, which will make it this. And if we did 2 contracts, that will increase our buying power. So I'm not gonna do that. But if we change the width to 30, that's only gonna increase our buying power by $30. Excuse me, by $56. So we can do that, and that's gonna be 226. And you can see by history, we're just gonna go to this history really quickly, just so you can see why I'm doing this. If we go to the ES, and you can see that there's about $78 that it cost us to buy that back. So selling this is going to give us 226 in credit. So, and we changed the width. So I talk about keeping the width of the spread the same, but if you can reduce the width, that's reducing your risk, and still get a credit, then that is ideal. So that's what I'm doing now. Went from a 40-point wide at like the 6 delta, went to the 15 delta, and changed it to a 30-point wide. So let's see if we can get filled really quickly here. Let's go to 235. We're still getting 221, and there we go. So now we got filled, and if we go to this history real quick, you'll see what I'm talking about. So all right, so this is the history on the ES, and we just received about 160 minus this, let's say $17. So we got 143 in credit. And so now if this continues to go up, we'll be in a better position to kind of fight it a little bit better. And so there we go. All right, so any questions before we conclude this morning on what we did? And if you have these type of positions on, I encourage you to take them to adjust, right? If you have that RTY on, and if anyone needs any help, please unmute your mic and let's see if we can help you. Any questions this morning regarding what we just did? All right, so anyone doing any of those trades that was recommended? Anyone looking to do that iron butterfly? Go ahead.
I left that one really quick. So could you go back over Oracle?
Okay, perfect, we'll do. All right, so this is the Oracle trade. I'm gonna hit replace order, but I'm not going to actually replace it. So this is the Oracle trade, Dana. By the way, were you able to do that adjustment this morning?
I was able to get out of the put. The call side sold. The put side hasn't sold yet, but it's kind of going down a touch right now. It might fill any minute.
Okay, all right. I would
Almost.
I would force it, and just in case it shoots back up. But with that said, this is the iron butterfly with Oracle. That is, the earnings come out tomorrow after the bell. If you put it in, and then just say we get filled at this 175, our max loss is $75. Our max profit is 175. But we're trying to just get 30-40% off this deal if we get that before the close tomorrow, we'll take it off. If not, we'll play it throughout the earnings, betting that it's going to stay within that expected move. And if it does, for the most part, we should win. So I really like this risk reward type of trade on this Oracle. So we're selling the 54. Iron butterfly is like selling a straddle, selling a straddle, and then buying the wings. So we're selling this 54 strike, 59 strike, selling the 59 strike, buying the 56.5 on the put side, and then buying the 61.50 on the, I'm just really off this morning, buying the 56.50 on the put side, and then buying the 61.50 on the call side.
Can I see the curve?
Say that again?
Can you show me the curve on that?
Yes. I can see if the curve would show for us here. So you can just, it's kind of tight because I got everything in, but you can see it has to stay in this type of range, right? But that is the expected move, and if it does, then you're going to win, and you're receiving enough credit to take this risk, meaning that you're receiving way more than what you can lose. I mean,
Okay.
you're receiving 175, the max you can lose is $75. So and if for some reason it shoots down, what we could do is roll the put sides out if we wanted to, betting that Oracle is going to recover and go up just like this market has been going up and so forth.
And in
But we'll
general,
see.
you wouldn't have to do anything because your max loss is already less than your profit.
Your max loss, you could still lose $75, right? And if you're okay with losing that amount, then you don't have to do anything. You can just let it. If you lose, you just take the loss, right? Or you can adjust. And so you're doing this trade. I'll show you what I would do after it plays out. But worst case scenario, Dana, we lose $75. I don't think we're going to lose $75. I think worst case scenario, something happens to, and we have to get out at, let's say, a $50 loss or something like that. But I'm going to probably rule it out if it's the put side that's causing the problem. And maybe if even it's the call side, if it's causing the problem, it all depends on how much Oracle has been going up recently. And then I just check, right? So Oracle hasn't, it's been pretty flat. So this is why I'm expecting it to stay within that range, right? Its high was the 62.60. We're on the call side. We're at the 61.50 on that long leg and so forth. So I like the position. We'll see how it plays out though.
Thank you.
You are very welcome. We're not gonna do it unless we get filled at 175 though, Dana, and it's trading at 173. So we have all day to see how it plays out and to see if they'll give